Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again at the gold market. So on Friday, if you remember, we talked about this minor grabber and we have prepared the trading scenario trading plan, how to deal with the opposite patterns that we've got. If you remember on the intraday chart, based on this engulfing pattern, we've got reverse head and shoulders, but at the same time right on Friday we've got the opposite pattern, which is a bearish grabber, and it was some challenge to combine them together, take some position that might be some compromise and find the point that has the lowest risk level. Actually, plan has done well. I will show a bit later. Currently, what I would like to say is that, as we warned in weekend, we said that don't be too fascinated with the pairing of this grabber, because previous performance was much more impressive, and that might be just, well, some kind of an occasion as a result by product of the closing moment on Friday and MACD predictor line. So sometimes it happens that by the end of the week, when the market is suddenly closed, it could perform some patterns such as this grabber, just because the week is closed in the particular moment, and that leads to the pairing of this grabber. If you take a look at the other markets, they indeed have some background for that is bearish for the gold. In particular speaking, you could see rally on the 10-year bonds. So I talked about this in the euro currency video. On the dollar index, we have the upper direction is also potentially bearish for the gold market, but I suspect that something is going on in geopolitical sphere. I already talked about this, just because we see a really strong resistance of the gold market to any bearish pressure, despite external impact from the financial markets. This usually happens when some geopolitical component exists here. Daily trend has turned bullish, as you could see. On the lower time frames, take a look what we have. Here, with the forming of this head and shoulders, that's our basic pattern, major pattern that we talked about this. Market has formed two side-by-side bullish grabbers. Both suggest taking out of this top. As you understand, if market taken out of this top, daily grabber will fail. So that's recently formed patterns that we've got against the bearish position. And in general, if you take a look at the performance on the hourly chart, take a look how the situation was developed. Recall what we said on Friday. This is the point for possible taking long position around the neckline. That's the compromise point. So because this is simultaneously the bottom of the right wing here on this pattern, where you should take the long position if you'd like to, and that also might be considered for starting of the right wing, or sorry, right shoulder of this minor pattern. That could be used by the bearish traders who are searching chance for taking short position at the top of the right arm. And this area suggested that some at least minor upper direction should happen, and that gives us great chance to take the position with a very small risk. So as you can see, our plan has worked nice. So we've got upper direction, and it has become even greater than we thought. So, and market still stands above it. So currently long position has break-even stop. If you have taken short position based on this grabber, so grabber is still valid. Currently probably you're somewhere in the break-even. So if you even have taken a position based on supposed head and shoulders, so the top of the right arm stands somewhere in the middle of this area, so you're somewhere in around the break-even point. So currently bulls just keep watching what will happen, just because position stands in the minor profit. We have the grabbers on the full time frame chart that could work, and in general overall price performance here, well, this head and shoulders has not been formed. You can see it's some more significant upper direction, which is not good for the bearish background. And from that standpoint, bullish pattern looks more preferable. But if you have short position based on the grabber that we have on the daily chart, pattern is not failed, and theoretically you also could keep trying to hold it with a stop somewhere above this area. So because we don't know what will happen, maybe any data might be released in some moment, some news might be released. So currently, well, it's a really explosive time especially in the politics, and gold is very sensitive to the subjects, so situation could change in the blink of an eye. So from that standpoint of view, personally, I like more bullish position in the current circumstances. It just looks more solid. But if you already have the bearish position, you probably could try to hold it. So that's actually our view on the gold market. Let's keep watching what will happen. Particularly speaking, currently it's very interesting what will happen with these hand shorts, and whether we'll get this kind of the A, B, C, D patient back to somewhere at 2360, 2365 area.